We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. I'm joined now by Andrea Keenan, Chief Strategy Officer for AM Best Rating Services. Andrea, welcome.
Thank you.
A lot of talking here in Monte Carlo about the hardening market. What kind of value do ratings add in that environment?
Well, ratings always add value, but in the hardening market, there is a temptation, I would think, to not pay attention to the financial strength and the pressures that combat financial strength. And so it's always important to make sure that the discipline is still in the market. Pricing does not necessarily have a immediate impact on what a rating would do. There's certainly other factors involved. And so ratings, while usually those things that contribute to a hard market, for example, a storm or an event of some sort, would be a reason why those are looking to ratings. That's when I think our services is the most important to policyholders. But during the good times, when the underwriting is easier, it's also important for the ratings agencies and the regulators as well to keep an eye on the capital, where it's being deployed, and that it's being deployed responsibly. So while it's certainly positive for profitability, it's something that we really need to keep an eye on and make sure that the cycle operates as we expect it to. And we'll be watching the cycle that hopefully is going in this direction for a while.
A lot of talk about risk appetite, and risk appetite both from an underwriting perspective, but also from an investor's perspective. And we're seeing investors being a little bit more discerning in where they're placing their business.
Well, as they should be. And hopefully a responsible investor is really paying attention to where they're placing their constituents' capital. But it's important for the risk to be selected with the risk appetite in mind. And certainly returns have been hard to come by in years past. And as returns are easier, both in bonds and in other types of investments, then the investor owes it to their constituents to really pay attention to where they're going to deploy that. There's no such thing as a free lunch. There is no type of investment that's going to have an automatic return. And so I think that really being discerning about risk appetite and really paying attention to the fact that you're actually getting paid for the risk that you're taking on is an essential role of the insurer and of the investors.
So the last 2 or 3 years have really changed people's attitude to risk and perhaps to insurance as well. How are insurers positioned to talk about the value of insurance?
Insurance has a good story to tell in this environment. I mean, you could say that we're the protectors to a certain, certainly we are the protectors in a lot of ways. That we increase awareness of climate risk. We increase awareness of governance. I mean, ESG have been on the lips of many people, especially in recent years, but insurance has long been in the business of protecting against environmental peril, having good governance. And as far as the S goes, insurance has a wonderful story to tell. We are about financial inclusion and making sure that there's protection for the long-term sustainability of a society. And insurers are equipped with the tools to be able to create sustainability, and it is our business to take on risk. So I think that insurance is a bit of an unsung hero when it comes to peril. And I think that's why a lot of really interesting talent is attracted to the insurance industry, because they've found that the industry that touches the most lives isn't necessarily astrophysics or geoscience, but academics or other skilled professionals can apply their knowledge in those areas into the insurance sector to really touch the lives of people. And so I believe that we have a great story to tell. Maybe we need to get better at telling it, but it is something that, I'm very proud to be a part of this industry because of it.
Partnerships are very important in the insurance industry, partnerships between underwriters and distributors. Tell us a little bit about how people manage those partnership relationships.
Well, an event like this is a wonderful opportunity to manage partnerships for sure. And being in person, it's hard. It's hard to replace what it's like to really understand what someone wants, asking a question and asking what their pain points are. What is it? What is a problem that we can solve together? And for the most part, people are looking to solve problems together. And then if they represent a government, if they represent a policyholder base or an investor base or a capital provider of some sort, then when everyone's brought to the table, it really has it has a multiplier effect on the good that can be done. And in a place like Monte Carlo, when we're all here together, all different parts of the value chain, and we can all come to the same table, perhaps meetings that we had earlier in the week, we can then come together later in the week and bring together multiple parties, and all parts of the value chain can participate. It's really, the synergies are amazing. So you have the big partnerships like occur with public-private partnerships, but then you have the partnerships that are in the private sector between the various agents, brokers, underwriters, and insurers. And it really, there's a lot of good that can come from all of that, and hopefully with minimal cost.
Andrea, thank you very much indeed.
Thank you so much for having me.
For AM Best TV, I'm Richard Banks.